Hello, entrepreneurs. Joe DeCharis, CPA, coming to you live from downtown Flushing, New York, once again for another amazing episode of How to Win at Business. If you're watching live, please give me a hashtag live. If you're watching the replay, give me a hashtag replay. Tonight, we are going to be talking about what can you deduct. You know, that's a common question. People say, oh, can you just give me a list of things I can deduct? And you know, it's really pretty simple what you can deduct and what you can't deduct for business. So this is the IRS publication on business expenses. And what I want to bring your attention to here is right here where it says, what can I deduct? And this is the rule. To be deductible, a business expense must be ordinary and necessary. Okay, it's got to be like a common expense in your line of business. Does that make sense? So what's common and what's necessary? That's the determining factor. If you could prove that you did something for business, then it's business. It's deductible. What you can't deduct are things of a personal nature, like haircuts, you know, getting makeup, buying makeup, personal, you know, food. Your personal living expenses are not business expenses. That's why they call them personal. So, you know, Donald Trump thought that he could write off his haircuts because he was a media person. No, they specifically say you can't write off haircuts and you can't write off clothing unless you have your logo on your clothes, because then it becomes a uniform. So if I had Joe DeCharis CPA over here or Bedrock Business Builders, those are deductible business expenses because I'm using it for branding. It's a method of advertising. Okay. So, you know, when you go through all of these ridiculous IRS publications, and you know, instructions. The problem is that there's a lot of information here, but what's not here is important. Okay, what's not here is important. How much? Okay, how much can I deduct? When can I deduct it? You know, it's really simple, folks. So let me boil it down to you in a nutshell. What we do at Bedrock Business Builders is we set up your accounting system, and this is how every business should be run. We try to separate out any personal expenses that are going through your business accounts. But if it's going through your business account, whether that be a checking, savings, a credit card, PayPal account, you know, there's so many different platforms now. But what we do is we will account for all of those transactions one way or another, either through Wave apps, or sometimes we'll just get statements and put them on spreadsheets. But eventually what we're doing is we're taking all of those transactions and we are assuming that because you used it as a business expense, that we're taking it for business. Now, nobody's perfect. You know, I buy groceries sometimes with my business card, but I'm not deducting that. It's going into my drawer account. So that's the thing. So the bottom line is, if you say it's for business, then it's for business, and it would be up to the IRS to prove that it's not. Now, some things, like I had a client that thought she could write off a $15,000 necklace as a business deduction because she gave it to a client. No, That is not a business deduction. Okay. Now she could have given the client a check. The client would have had to pay taxes on it, but then the client could have bought the necklace. And it's not a business write-off. So that's the simple rule, folks. You set up a business account, you use it for business, and it's all deductible. Okay. Things like car records, the mileage rules and all of that stuff. Again, it's however you can prove it. However you can prove it is what works. It could be with pictures. It could be with testimony, sworn testimony. So, they don't put all this stuff in the simple instructions for business owners. So that's my story. I'm sticking with it. God bless. Hope you learned something from this. If not, maybe next time. Over and out. See you soon. Thank you.